Welcome everybody. Welcome everybody back into the stream. All right, today we're going to talk about gold. It broke out. It did. It's breaking out right now, as you guys can see. It's at 1580, 1581. Again, depends on what website you guys are using. But we're making a healthy push. Today I want to talk about gold. Obviously how it broke out. I think it would have hit on its own to 1550 if it wasn't for the general the Iranian general, Soleimani. So if it wasn't for that, I think it would have reached 1550 on its own. We would have probably sold off a little, probably gone back above it, got over that resistance, and made it a new support. But since that, it blew up. That's why we're at 1580. But we'll talk about that. We'll talk about what levels I think is gonna hit next. Where to keep your eyes on, and then we'll talk about the gold miners, why they sold off. It was a good opportunity to buy in the afternoon before the market closed. Hopefully you guys were able to get some and you guys didn't sell off. Because that's why I want to use your practice charting or understanding, resistance levels, support resistance, just to get an idea of it. Mostly I focus on fundamentals. But when I like to chart just to be able to see the breakouts, because that's where you make the bang for your buck. We're talking about the repo minutes. The Fed minutes. They talked a little bit about the repo market. We're getting another step closer to QE. We have a decline in car sales. Even though you could we'll talk a little bit about that. Why consumers? I think consumers are bad, still bad. Then I'll have my thoughts on it's gonna be a war, with the Iran war, and my thoughts on what is it that I think about it. And, how I think it's gonna impact the U.S. Could be wrong, like I said, I'm not a financial expert. I'm just somebody, that started all this to help all my friends. All right, so gold, when it reached 1550, you guys could tell, people were selling off the gold miners. It was early morning, like about 7 o'clock Pacific, California time. It peaked, and then they sold. So it was really, really quick. So the market for us opens at 6:30, and then, by 7, people were selling. Why is that, right? If it is the first time you see this, to you it's new and you don't understand why. Why is it that the price of gold went to 1550 and yet some gold miners just sold off? Almost all of them, it was flat. At the very least, it was flat. You could call it flat. Gold last year performing, it was up 30%. So almost any gold miner you took, you should have made money on if they had a good balance sheet, producing mines. Producing gold and silver. You should have had a good return. That was last year. Obviously, it's a new year. So last year when we got to 1550, it sold off to 1449. That's why we were trying to figure out the bottom. I said it was going to be 1448. And I was still looking for it to come down a little bit more, 1420, so I could really add to my positions. I didn't think it would go below that. But we never got there. We only got to 1448, got clipped, and then 1449 got clipped, and then we went back up. Then we've been on this tear since that moment. If you would have added any level, 1480, 1460, 1480, even at the 1510, you're up. If you would have gotten futures, options on them, because that's what I usually trade. There's options, but I obviously have stocks. I don't try to sell them. I'm holding on to them. I'm still holding on. I don't plan on selling them. Really, I just add when there's a correction. There's always gonna be corrections. Nothing goes up forever. So we got to 1550. People were selling off because they thought it was a head fake. Again, the last time we had some big news like this, that you could compare it to, that was, it's not really comparable because the general died, act of war. General Soleimani, I'm not a fan of the guy, but, the problem is, to me, we're going to go to war. So I didn't sell off because I don't see how, like I said before, I don't see how we de-escalate this. I don't see how, right? Even now, you're keeping up with the news. Trump is just doubling down. You're betting on Trump. Basically, he's gonna double down. So I didn't want to sell anything to 50 on the 50-50 level because you're betting on Trump that he's gonna come out and just come out swinging. He doesn't back down, and I don't think the Iranians are gonna back down either. So it's gonna be a clash. So that's why I refused to sell off, and we refused to sell anything at that moment. So what is gonna happen most likely in the morning? This continues to tear. I think it's in the next resistance, 1610. We like round numbers of 1600. You can look at the 1600 level, and it might start to sell off. But if we continue on terror, it might be 1610. That's the level that I'm looking at. If it gets 1610 and the gold miners, and silver miners are coming up, there'll be catch up trades. There'll almost be like a catch up trade. Everybody that's sold off will now want to be a part of it and will have to buy back into it. If you were short, and a lot of these gold miners have been shorted by a bunch of people, right? So anything 15 to 25% interest short, they're gonna be covering. They have to cover. So it's gonna make a massive pull. So you're gonna get a bunch of volatility in the morning. And if, like I said, if this continues to fit 1610, I'm gonna keep an eye on it. But again, I'm gonna look at the news. I have my phone on notifications on because I want to keep up with the news. I need to know what's going on. Even though I still, like I said, it's harder for me. It's hard for me because I have a normal job, just like everybody else, most likely. But I still do my part in trying to get it because I want to be able to do this long term, right? I have a long term plan to try and get better at this and continue to grow and help those that I'm helping out, in my personal life, my friends and families, to understand this. So the price of oil has also gone up due to this, obviously. But let's talk about now why I believe it would have gone up on its own from 1530 to 1515 level. So we get the news that the ISM number comes out, right? This is a big mess. A 47.2, right? It was almost 2 points below. We were expecting a 49. So we continue to go down. This is a bigger part of the economy. So when it took down, we pulled up. Gold stayed at 1550 and it went up a little bit. It was staying like 15 bucks up. So we were at 1530 like we were at Thursday before all the news broke out. Then Thursday night we get the news. This would have pulled it up to 1550 levels. And then for the oil, crude inventories, they were down. Negative 11. So again, we have a trend. Granted, this trend could continue again. But if the demand, we go to war, the demand for oil is skyrocket. So we're not gonna have enough eventually. Right now, we're a net exporter of oil, so these stuff would have brought it up on its own. So these are the gold miners. Do your research, do your part. Look for some that you like. Look at their balance sheets, understand where are they at, how are their mines performing. Read different articles. Take your time. It's obviously it's your money. You gotta do your part. I'm not a professional investor. I'm just, like I said, someone that's trying to help out my friends, my family members. So just look into them. Some of them, have bad mining performance in there. They're not getting as much as possible. But so that's why a lot of them have short interest. That's why a lot of them are being shorted. But you'll get that pop up because they're gonna have to cover. If this continues on a tear, they're gonna have to cover eventually. So just look into them. There's a lot. Obviously, I see mine through here. You don't want to have that exposure. Get an ETF. That's fine. You'll be fine. So this is the price of gold currently 1581. It's easier to see. I'm just using theirs, but like I said, I recommend you using another platform. It's just it's easier quickly for me to just show you. So we're here. We're gonna get, like I said, I think 1620, 1610, 1620 around there is gonna be the spot where we get to. This is not ideal. The charting, like I said, I use Thinkorswim, the platform. It's a lot easier, but I just wanted to give you guys a quick overlay. Like I said, I like MarketWatch's layout. Easy to go through, easy to explain. A lot of the news is there. So just Japan, we'll see futures. Give you an idea. So right now they're down 100. On Friday we get the what's it? Unemployment numbers. The ADP numbers, I believe. I have something pulled up. We'll see right now. Silver is up too. Silver last time I got up to $19. So keep an eye on those. Like I said, keep up with the news more importantly. But keep an eye. See they're selling off or people are buying. Buyers are coming in. That's what matters. Oil. Like I said, oil causes inflation. The higher the price of oil goes, the more everything costs to make. Inflation's gonna pick up. So the Fed, over here saying that inflation is nowhere to be found. They're gonna find it's gonna slap them in the face, and they're gonna quickly realize they're gonna have to change policy, and who knows how they're gonna do it at that point. Almost everybody that I follow and listen to, says they put themselves in a box, so they're gonna have a hard time with that. So right here we have, oh, the things, there we go. The U.S. monthly employment rate is due Friday. Ta-da. So here's some economic news, stuff that you should keep an eye on in your reports. I know GDP estimates, Federal Reserve, they're all speaking on Thursday. Talks about the bonds. This is from Bloomberg. Commodities, West Texas Intermediate crude increased 1.8 to 64.21. Barrett soared 2.1, $70 a barrel. Gold rose 1.4, 1573. Like I said, kill with the news, because this is an article I literally just pulled up right now. So it's going by quicker. So here's oh, that's right. Goldman Sachs came out and said that it's recession proof. Every time people say it's recession proof, something comes back and bites them. Every single time. It happens all the time. So here you have this. Didn't the folks at Goldman Sachs just say the U.S. economy was virtually recession-proof? The problem with fitting the macros and narrative on the fumes and the liquidity introduced financial mania as IM's manufacturing productions orders slipped to April 2009 lows. Da-na-na, there's your trend line. There it is. Contracting. So, another thing I just retweeted. Production fell 43.2 versus 49.1, lowest level since April 2009. New orders fell 46.8 versus 47.2. What do you think is going to happen? They're not going to spend more. Corporations are not going to put more money, to invest. That's something people have been waiting for. All it's done is contracted too. People aren't doing it. Companies aren't doing it. Why? Well, they're going to do less now. Because with all this, all this caution that they need to have with this war that we're gonna have, how much do they produce? What do they do? Who's gonna make the money? The bandits. Who's gonna be the bandits? Defense sector, oil, commodities. This is what I just tweeted out when all the news was coming out. Gold would have moved above 1530 on its own based on fundamentals alone. This would have moved towards the 1550 range. 1550 should be locked. Would hold. So I was just telling people, like I said, people that I know, that follow, that my family members, my friends, just hold. Yeah, the miners are selling out. It's fine. People are, are concerned. They're worried, which makes sense. So here's a Fed minute. So I'm just gonna quickly go over, some of the things that they talked about. But the thing that interests me the most was the repo market, because we have fractional reserve banking, right? So basically, I take $1,000 to the bank, then I deposit it to the bank. I think my money's there. Then they then loan out that money 10 times, so that's 10 grand, 1,000 to each person. Let's say, make it easy, and then 8% interest or whatever you want to do, 5%. Or those people are, right, and then it's 10%. So it's 50 times 10, 50%. They're getting their money back, right? So I think my money's there. So that's fractional reserve banking. Like I said, like I told you guys before, I think you guys should watch the Fed, not so Federal, not so Reserve. It's 4 hours long. Just do the first hour. It explains about fractional reserve banking, quick insight and all that. And it puts the pieces to the puzzle when you're hearing like real financial experts talk about it and why it matters that the Chinese are cutting the funds more and more, 8 times in a row, I believe it was what they were saying. And here in the U.S. we do the same thing, but we haven't. I don't believe we lowered it. But remember the stress test. They're supposed to have some liquidity. Treasuries are supposed to have some. You can't go below a certain number because we test for them. More and more articles are coming out about stagflation. When they test them, we don't talk about stagflation because we don't think it's in the cards. We only talk about it if interest rates go down, like the 3 scenarios they have. So with the repo, that's why I'm focused on the repo market. So what basically came out of it was that we're moving to QE4. They're thinking about buying coupons. The Fed is considering expanding security purchase and reserve managements to include coupon-bearing treasuries securities with a short-term maturity if necessary to ease liquidity constraints. So we're gonna now buy interest rates, right? Short-term interest rate bonds. Treasuries, which then will allow the interest rates to go up. they're trying to hold them down, but they're gonna go up. We're gonna have like I said before when I first started doing all this, we're gonna have stagflation. I believe we're gonna have recession and inflation. We're gonna be dealing with both. It's gonna end poorly because we don't test for it, but we don't know it's gonna happen exactly. But it's gonna be piss poor because now they need to. They're thinking about having their own I kind of want to say like a branch permanently. To keep putting money into the repo market. It's gonna end bad. The managers discuss expansion to gradually transmit away from active repos operations next year as bill purchases supply a larger base on reserves through some repos might be needed through April when tax payments reduce reserves. They gotta pay taxes. April comes around, everybody's gotta pay taxes, right? It's gonna reduce their balance sheet. It's gonna reduce their cash on hand. They gotta pay their bills, so they need more money. It's basically all it's saying. And again, this goes to the stress test. Fractional reserve banking. What do? They gotta keep adding more money, so they're gonna increase everything. They might as well make it permanent at this point. Just add a branch and just leave it as so. But here they're basically talking about the same thing. This is from Zero Hedge. Follow them on Twitter. Great follow. They always talk about fundamentals, and you could always read the articles. They're always up to date as well. They're free. Most of the articles nowadays, you gotta pay, as you guys could see from Bloomberg. It basically talks about the same thing, but then they give their commentary. Here's one that I brought up because I did that story where the guy talks about buying a car, then taking it to the dealership to get another car, which the bank will then give him the money to put it on the new car. He did it like 4 times. Okay, eventually, you run out, of credit, where the bank is not going to loan you any more money. So then I expect the car auto sales to continue declining. Eventually, it's just going to give away. So just to quickly show you guys, this on December U.S. auto sales, negative 29.5%. Estimated was for negative 22.1. Honda December auto sales negative 12. They're expected to go up 0.7%. December Toyota auto sales negative 6.1. We were expecting to get 8.8. And like the same thing, they fell 8. And then Fiat, Chrysler, again negative 2.3. That's what we got. They're expecting 2.6. So slightly better. 0.3% better. So they keep declining year over year. I think the chart, if you do the 5-year over year chart, from what I've seen them, they gruesome. It was China first, and then it was the U.S. Eventually, the bill comes due. You can't keep adding your old car to your new car. Subprime car lending, auto loans. I'm not a fan of them. I'm not a fan of Alliance and all those companies that do it. Here's just the Dow futures, negative 123.43%. The one thing I wanted to talk about, focus a little bit on, because I was talking to my girl about it. In the U.S., right, since Brentwood, when the dollar became the reserve currency of the world, my parents don't know. I don't know. I've never seen the world, where the dollar isn't the reserve currency. It makes it really hard for us to understand, this world, or be in a world where the dollar isn't the reserve currency. So I explained to her my concerns with the Iran wars. I don't think we could afford it. What I mean by that is we owe 23, right? There's an old article, it's just from December 9th? Oh, December 20th. So it's fairly new. All right, so we owe 23 trillion. Every year, not every year, but recently we've added 1 trillion in the year. We're spending, right? A lot of it went to the military. And I just wanted to quickly show you guys, right? Foreigners, they're the ones that buy our debt mainly. And what I was telling her, my concern is, I know that China owns a good portion of our treasuries and of our debt. And my concern is that like when it happened, I figured that Russia might be getting involved, right? But we know Russia to always been an enemy of the states. That's the thought process behind that. But that I told her, if I'm Iran, why not make calls to China and ask them, because they already have problems, and China's been buying oil from them. Like I said, they've been caught before. New York Times did articles on it. So why not just call them and tell them, yo, will you support us? Will you back us up in this? If they would have killed your general, you would have told us to back you up. We would do it as an act of war. So why not support us? We know China and Russian banks the central banks have been buying gold. Turkey's been buying gold. Their central banks are buying gold. We know that slowly, like I'm showing you guys articles where they're slowly, selling the dollar. That's why I don't think the dollar is gonna be reserve currency, because there's been articles, there's been trending where they're slowly throwing away the dollar. They don't want to continue using the dollar because it gives the U.S. powers to sanction. Even now, Trump has announced that if Iraq wants us out, fine, cool. They voted to get us out. The issue with that is that we want to get paid, right? Trump wants to get paid for all the money we put into it. It's like, yeah, well, pay us all the billions of dollars that we put into your country if you want us out. So that's the power of the dollar. We can hit you with sanctions, and that's what we're threatening Iraq with, sanctions. Trump is doing it, but he's the president, so that's us. So China owes 1.1 trillion. Okay, let's say we go to war. Like I told you, let's say we go to war with Iran, but China backs Iran. If not directly, indirectly. Say they start selling the treasuries. Like, oh, well, somebody else will buy it, right? And if somebody else will buy it, and if somebody else buys it, when another country with Japan, United Kingdom, we need somebody else to buy it because we can't buy it. The U.S. public, we only have like 3% say. Most people have like $400 in their savings account, or they can't even do a emergency fund like of $800. That's like the average American. You're not gonna buy bonds when you have somebody else to do. It's not gonna happen. And how much does does war cost? War costs 2.4 trillion. An estimate, right? It's not an exact number. 2.4 trillion. So let's say you do a year. You're 23 to 24, right? And then you have China's, you have 25. Then you do 2.4 trillion on top of it. You're pushing to what, almost 28? At some point, the bill comes due. People are gonna want, other nations are gonna want their money. They're gonna ask how are you gonna pay them back? That's what I tell her. She's like, can we just print out more money? I'm like, yeah, you're 100% right. The U.S. could print out a lot of money. We could print it out and pay all those bonds that we owe them. But it devalues the money. As a little kid, you have a hard time understanding the concept of like, why not just print more money and pay other people? It's a really hard thing to understand because it doesn't make sense. Money should be plentiful. But as you get older, you're introduced to that idea, and it becomes understanding that the more there is of it, the less you want it because everybody's having it. So if you're printing out all that, nobody else is gonna want it. Eventually, that's why I think the dollar is gonna be pushed off the cliff if we go to war with Iran, because Russia could support it, but Russia's always been an enemy. China at least owns some of our debt, so they ban our finances. That's something you'll hear some people say. We get the stuff from them. We give them the bills. We get real items from them, TVs and whatnot. A lot of electronics. We get it here. Then they get the dollars, and the dollars they dump it into the market. Into the bond market. They buy the treasury bills. So they've been doing this. So what happens if they stop? Right. On top of that, you have a trade war. You have trade war. You have financial war with China because they're helping Iran, and then you have a real war. You have three fronts. I'm not a wizard. I'm not a war expert or anything. I'm just saying I don't see how this ends well for us. I don't see the strategy behind it. That's the only thing. That's one of the things that worries me about the Trump thing. The more he tweets out that we're gonna attack them, the more that he says that we're gonna do this and that, and if you attack us, we're gonna retaliate. We're gonna retaliate. We're gonna retaliate. So it doesn't sound to me like somebody that really has a plan. Somebody that's confident and that knows already what they're gonna do because they're expecting it. I don't see the 3-day mourning period for the general that Iran asked for. It ends tomorrow, so or ended tonight, depending on the time zone. They're gonna do something. Cyber war has been one of the things people have been hinting at. Going to the courts and file a lawsuit. I believe that's something that I also heard, but I'm like, that's nothing. It's gonna be something severe. Whether they attack Saudi Arabia, because Trump called them to let them know that we were gonna kill Soleimani, their General Soleimani, and he called Israel to let them know as well. So they're gonna attack somebody. That if they can't get us, they'll get them because they're in the region. So again, that's why I'm keeping track of the news. I'm trying to see if gold goes up to 1620, 1610, and if it holds it around that area, I'll look to see. The miners should be catching up. I'll try and see how everything's reacting. The market's reacting. If gold stocks are going up and breaking new highs, that's basically what I'm looking for. Because in my opinion, they should be making new highs from all the covering, gold being high, political news, premiums on gold right now because of the tensions, Middle East tensions. A lot of these things are going to cause it to go up. So if it continues strong, the demand for gold continues strong, then I'll continue to hold. If not, I'll look to close some positions because I have them a lot. Like I said, I have a lot of February positions that I want to close. But I am concerned about the problem with the war with Iran, even though because we live in the U.S. I live in the U.S. at least. I don't see I've only known a world where the dollar is the reserve currency. Where if you want to buy oil, the petrodollar, you want oil, you got to go through dollars. You got to get your dollars first before you can buy it in your own country's currency. If you live somewhere else, like Europe. So some of them do. I know some of them do take the euro. The euro has been known to happen, but most of it is the dollar. That's what keeps the dollar. As the reserve bank of the world, basically. Don't know how the Fed is gonna manage all this either. So with all this going on, everybody's waiting for the meeting to happen. Especially if we go to war, what are they gonna do? It's an interesting time to be alive. Because I told my parents, you guys don't have never seen it because my dad was born in '66, my mom was born in '62, so they have no idea of how it works. But if we will get a rude awakening, the cost of living in the U.S. will go real high, real fast, and we'll come home to roost. So those are my thoughts on this and why I'm so concerned about it. Why I don't want it to escalate, but I don't know how they're gonna de-escalate it. And war is extremely expensive. Forget the money; is all the lives that we're gonna lose. It's a scary time. Scary time to be young in the U.S. right now. Like I said, I have nephews. I have loved ones, cousins. That are really young. I definitely don't want them going over there. All right, guys, I'm gonna end it there. Thank you for hanging out. Hopefully this helps you guys out. Hopefully you guys don't panic. If you see gold going up and it's still holding up, you don't need to sell. You could hold on to it. Buy stocks is easier. You don't take a loss in stocks unless you sell at a loss or the company goes bankrupt. As for options, if they expire, then yeah, you will lose your money. That's why I always tell people to start with stocks, start with paper trading. Do your research. It's not easy doing it. You have to really want it, because you will lose. The thing is, when you're winning, ride your winners, cut your losses. Be persistent. Just keep doing it. Always put money in the bank. Always put some money in the bank. That way, when there's a pullback, you're able to add to that position further, you know, then you'll be fine. It just takes time. You just have to be persistent. If you really want to day trade is or just make some extra money, keep it up and you'll get there. Right now is when you're going up it's easy, right? You're excited. When it's going down, that's when you really need to get into it and see where could it bottom out so that we could get back in it. I like to trade on fundamentals. You know, like I said, I use charting just to see breakouts. So if I see identify a breakout, then I'll bet on it through options and see if I could get into a stock like that. And I like options because it tends to show you what people are doing. And you can see if somebody's extremely bullish on it by watching the calls on a stock, or someone is bearish on something. You can see it by them buying puts on it or covering their position. So that's why I like options. But if you're new, just stick to stocks. You'll be fine. Nothing could go bad right now because gold has been in a bear market for 6 years, something like that, 6 5 years. So we'll go up. There'll be corrections, of course. So just be wary of it. Try not to buy at the extremely high. Try to understand levels, support, resistance. There's people that do great videos out there on YouTube just teaching that. All right, guys. Hopefully this helped you out. If you guys have any questions, you could reach me out at Twitter, Skies Affiliation. Instagram, lost_still lost. And especially on here, you guys could use whispers on Twitch. On YouTube, you can leave a comment. I'll read it. Get back to you. All right, guys. Thank you for everything. Appreciate it. Hope you guys had a good time and learned something.